What's up, guys? JJ Fade 23. All right, I'm gonna try to I'm gonna give you guys a video of what I consider the best short setups to be, and this is a lot of years of trading and a lot of years of knowledge and a lot of years of working with tons of great traders. And a lot of people don't like to just post these videos and talk about all this stuff, but this is what we're gonna do right now because I think it's going to be very helpful. Remember, I'm not a financial advisor. I'm just a entertainer, I guess. That's what I'm supposed to say. Anyways, all right, you guys. First things first, best short setups. We're talking about small caps. We're talking about market caps of less than 200 million, 300 million tops. So this is what it's going to be, all right? It's going to be price. The price has to be price $1.50 to $10. All right. Gap stats. For those of you who don't know what gap stats are, you need to go on whatchamacallit here. I've had them for so long now I forget the website. Hold on. Gap. Well, you guys can ask me just in the comments below. Ask for the link and I'll give it to you. The gap stats are something that you get on traded. Shit. What the fuck? Sorry, guys. I'm one sec. I'm blanking on the name of the company. Yeah. It's ThinkScript, one of those things. I don't know. Just comment in the thing below. I forget the name of that company. But gap stats, what they are, you guys, basically they show you every time the stock gapped up X amount percent, did it close below the open? What was the average spike? Yada, yada, yada. So the gap stats, 75% close, 75% or greater, close below open price. All right, that shows you that the stock, every time it gaps up, or 75% or 85 or 95 or 100% of the time it gaps up, it closes below that open price. That's one of my favorite things to use because that's, what's more important than that? It's showing you that the stock doesn't have a history of running and spiking and closing green on the day. It's closing below the open price. That's literally the most important thing to me. Also, news. We want fluff news. No really good things like cancer news or no cancer news. No throwing out real companies' names like deals with Walmart's and I don't even like FDA approvals and even phase 2 or phase 3 really good things. If it's phase 1, a half phase crap, or just companies saying just random fluff about this and that doesn't matter, that's the best. You just don't want any news of big contract deals, no FDA approvals, no cancer news, nothing that could actually make the company really have a lot of interest in it, high demand, and make them a lot of money. So, but the main things, no cancer news. I don't like cancer. No earnings. No FDA approval. No phase 2 or 3 met end points. Nothing, pretty much nothing that is really going to get a lot of people's interest and, has some money flow coming into the stock. Nothing that brings real money flow. Okay. Next, you guys. Next, we have ideally dilution. Dilution. All right. Want the stock to be a dilution thing. Check the filings. You want them to have a shitty cash position. Low cash position. Need for cash. High burn rate. Means they only have $2 million and they're burning $500 or $1 million a month, right? Or you just want them to have really running out of money, so they're gonna need to dilute if they have open S3s, S3. And remember, guys, Has to have effect. I'm not a filings expert, but if a company is low on cash and they're running out of money and they like have a S3 or filing for dilution, but it just came, say their filing shows they have an S3 from like 2 weeks ago, but there's no effect for that. They can't use it. And again, like there's a lot of ways that they can finagle dilution, which I'm not a master on, but if you are, good for you, and you definitely would want to have high dilution, a high chance of dilution, ATM or one of these in your as part of the setup. It's not a necessity, but it's going to help, obviously, because the more supply that's coming into the stock, the harder it is to go up. All right. Next, we want low volume. Low volume in the pre-market. Low volume in pre-market. And no float rotation. Definitely don't want the float to be rotating a million times. Then it becomes like a hot potato, right? Now the stock could be even more of a headache. It might still go down, but it might be a headache, especially if it has a tiny float. This one, honestly, guys, the float in pre-market nowadays, it used to be like, if it was over 10 million. Now they're always like crazy, like 10, 20, 30 million sometimes. I don't really care what the pre-market volume is, but a big one for me is the volume at the open, all right? The volume at the open I care about more. I call it the max open volume. Max open volume. I want to see like the opening burst less than 1.5 million, even less than a million. We'll call it 1.5 million. Because that means like even at the open volume, when all the volume comes in, it's still only pushing like 800,000 or something. There's a high chance to fail. There's not a lot of eyeballs watching it, not a lot of people jumping in, not a lot of demand. It's not rotating its float. It can fizzle out quickly, as opposed to the back. You want to short this stock. It opens and now it's pushing 5 million volume on every 1 minute candle. You gotta be careful for that because it can be a little crazy, right? It's just so much demand coming in, and you can get caught real quick. When that much volume is coming in. Not to mention, think of all these things, guys. All these things like volume and like float, these are all the headache meter, I call them. Like that's why I have a red flag criteria, which I will go over in another video. But it's how many headaches or non-headaches do we have? You take a look at the chart, right? You look at a chart, you say, this has a really good chart. It has really good resistance levels. Now, am I going to be more likely to trade it or less likely to trade it based on the work I'm going to do right now in pre-market? My pre-market prep and red flag criteria. And then that's what happens. So we break it down from the technical part, and then now more likely or less likely to trade it based off all this stuff that I'm going over, and then we make a decision. So max open volume, less than 1.5 million, and the faster it fizzles out, the better. Also, Bookmap, if you use Bookmap shows heavy supply at or near daily level. Heat map. I don't use Bookmap anymore, but a lot of people swear by it. Good extra confluence. Also, now the best ones are going to have very clear daily levels. Very clear daily levels to trade off. Now, guys, when I say very clear, I mean you can see it very obviously on the chart. All right, it means like that means like let me show you real quick. LFLY. All right, this is right here. Look at this. Let me just slip this over here. You see this? This is a very clear daily level that this thing topped out at pre-market today at 420. This is a very clear, obvious level. This is an ultimate high pivot. These kind of pivots are the best, especially when they're recent like this. Very clear, the whole world can see. All right, so very clear daily levels to trade off of. And now, obviously, if that daily level also has a shit ton of volume, like you traded 100 million that day and failed, well, even better. I don't require it to have a shit ton of daily volume resistance, but that makes it even better. So very clear daily trade off, high volume resistance on those days, even better. All right. All right. The float, guys. Float between 1 and 10 million. Anything less than 1 million, guys, that's like a hot potato. I used to do 3 million to 10 million, but I do trade some A+ setups that have less than 3 million float, but I won't trade less than 1 million float. Less than 1 million float, you're just asking to not be able to control your risk. All right? The stock is like literally moving like a hot potato. Some of these things, they have like a 500,000 float. You just get squeezed out so quick. Next thing you know, it halts over your stop. Now you can't get out. You're fucked. It's not worth it. All right? Not worth it. So stay in that range. Or if you're just starting out, stay in the 3 to 10 million range. That would be even better. All right? Short float. Short float doesn't affect the back test all that much, but I still like it to be less than 10%. Or even 5%, really. But, you know, that's just kind of like a mental thing in my mind. I'm like, when I do the back test, it doesn't really change the results so much. But as far as like your brain telling you, wow, there's a lot of people that could get squeezed here, you know. So just, you know, 10% or 5% even better. The lower the better. Also, we got market cap. Less than 200 million are the best ones. Oops. Less than 200 million. Ideal. I'll trade a 300 million market cap, but you know, that's only if everything else is perfect, right? So I'll get into that when I do my red flag criteria in another video. If I get 3 red flags, I automatically kick it. But if I only have 1, then it depends. If everything's perfect, but the market cap's 400 million, well, I'll still trade it. If everything's perfect, but the float is 1 million, well, I'll still trade it. If I have a 600 million market cap, a 400,000 float, a 20% short float, no, not going to trade it no matter how good the daily levels look or how whatever. All right. So institutional, I can't spell anymore. Institutional ownership and insider insider ownership both want to be 30% or less. 30% or less, or less than 30%. I'll trade if it's 40%, but you know, it's over 50%, it's a red flag. Again, we'll go over that. But A+, I'm talking. That means I'll trade it if it's 40%. I'll trade it if it's 50%. But I'm saying the best one's less than 30%. That's insider ownership and institutional ownership. Also, guys, best entry is definitely best entry. We'll call it best entry. Best entries are always by 10 a.m. even earlier, really. Like usually the best entries on gappers are like within the first 10 minutes. Because guys, the best gappers that are gonna work the best usually popping stuff right off the open and they're done. They just start fading all day. They don't even give up no fight at all. But if we do get a spike, guys, I just want to add this in here. I'm not saying the best short, it doesn't matter the spike it opened. That doesn't equal a best short or not. But the median spike it opened, median spike for the whole group of small caps that I back test is about 16%. Median spike for all small caps in my criteria is 16%. So remember that when you're trading. Now, I will trade off the open without a spike, but just be aware if something starts to spike, understand, okay, this spiked 20%. It has a high chance of failing now because it's already over the median. If it spikes 40%, wow, now it's really in a category of its own. If it spikes 100%, it's a black swan, right? So remember these things when you're trading, all right? So a lot of times, my favorite ones, they're already gapping up towards a daily level, you know, kind of just like this today, all right? Just like this today. We're gapping up. We have daily levels here, multi-touch daily level. I'll get into that in another video. I like multi-touch. But we already saw that this hit this pivot right here in the pre-market. So let's take, for example, all right, let's say that this was, one sec, you guys. Let's say that this was at the open, okay? Let's say this was at the open right here. This is pre-market. So we're way down here by the open because we already hit the pivot. But let's say this was the open. It was 9:30. And we get this pop and stuff. Boom. I would nail that. I love these right here. I love these. The stock market is coming. It's coming. It opens. We have a daily level right here. It tries to pop and it just slams back down. I'll short the shit out of that with my stop right over 450 all day. And that happens all the time. and you think like, oh, but that's because most of these just pop and die. You know, that's all there is to it. You just can't get blown up on the ones that really squeeze. You got to learn how to manage risk because not everybody wins every time. All right. So for the entry guys, right? Entry on stuffed candle, fake breakout, or trend line break, or lower high after rejection of daily level. All right. Watch. Jesus, my hands are freezing. Watch half and whole dollars. Whenever I make videos after the gym, it's like, Very important. Also, watch for volume exhaustion when you get big stuff candles. Big stuff candles on massive volume. A lot of times you'll notice, guys. What the heck? A lot of times you'll notice, guys. A lot of times you will notice that stocks reverse on elevated volume. Whether it's on the daily chart, you get a stock that's going up, 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 even a large cap trending up, and then it has a boom, blow off max volume day, and then it reverses. Or it's trending down, it has a quick spike to the downside on elevated volume, then it reverses. Well, all these things happen on different time frames, but it's the same thing happening. The 1 minute chart is the same as the daily chart, is the same as the hourly chart, just a different time frame. So you'll notice on the 1 minute chart, now look at this, right? Let me pull this screen back over here again. You see this all the time, all right? Look, you guys. You see this? Look at the volume on the reversal. You see this? Now, these are little reversals. We're talking intraday, but look at the volume on the reversals. Look at the volume on the reversal. Look at the volume on the reversal. Look at the volume on the reversal. Look at the volume. This is how you have clues of watching volume, right? Look at the volume. So you use volume and price together with key levels, and you spot that volume with the price at a key level, and you say, ooh, that's reversing right there. We have a little reversal volume, I call that. That's a little reversal volume. And that's how I'm able to do so many good swing trades in large cap using key levels too. When they're coming down, grinding, and wait for that extension, boom. I've noticed the volume for the day is going to be twice as high as the volume from yesterday, plus the stock spiking to the downside, and I got a key level there. That's probably the reversal volume day. See how you start to gel things together? Anyway, I'm getting off track, but yeah, so stop will be a little above high a day. So you entered on a stuff candle or a fake breakout or a trend line break. Guys, I hope you guys all know what these are. If not, we'll make another video. Write in the comments if you don't know what I'm talking about, because I could keep going on and on forever. But if you don't know what these triggers are to get into trades, just write in the comments and I'll make another video. So stop goes a little above the trigger entry or little above daily resistance level. Do not choke your trades. Guys, the reason why my typing gets all screwy right there is because I'm trying to hold down the caps lock while I do it with my hands like in printer in typing mode, and my fingers are jacked. Not to mention they're like twice the size of normal fingers, I think. Stop a little above trigger entry or a little above daily resistance level. Do not choke your trades, guys. One of the number one killer in new traders, they choke their trades. They're trying to get 2 cents risk, 5 cents risk. Once you start growing your account, then you can try to slam stops tight and get multiple huge reward trades if you want, but not at first. All right. And then best covers on small cap shorts are always going to be the 5 minute 200. So guys, it depends how extended we are, right? If you're very extended off the 1 minute 200, you can cover some at the 1 minute 200. But then after that, if you want to hold for longer, you got the 5 minute 200. And then always, in the big scheme of things, the best cover for shorts, which I still found to be unbeatable, is end of day. End of day. It's hard to do, but when you can do it, the winners that fade all day, like LFLY today, are going to always outweigh you trying to pick your covers at random places every day. Even if you use the 1 minute 200, the 5 minute 200 end of day, it won't be as good as the end of day no matter what. If you short exactly how you short every day and you always cover at the end of the day, I guarantee you that will beat you covering anywhere, pivots, 5 minute 200, 1 minute 200, whatever you want. If you do it for a whole month, I guarantee end of day cover will win. You'll get more odds, guaranteed. All right. So, a couple notes here. Really, notes. Geez, my hands are useless to me. Notes. Really look, I would say, really look at daily chart. Is the stock in a steep downtrend, or has there, sorry guys, or there been a long flat bottom marking possible accumulation and flattening of key daily EMAs, which I'll also get into. I have tons of videos on this stuff, but also, guys, you want to notice, right? You definitely want to notice this, right? Do the previous candles all have, like the previous daily candles, every time it's gap up before, right? Do they all have topping tails, which would say that the stock spikes a lot, but then it comes back down, right? Or do they all have just big red bodies, paint stripes reds? That means they open and just dump and close at the lows, because those are my favorite ones. They look like this, you guys. This is like today, all right? This is ideally, you want to find a gapper or gappers that gap up, and this is what they, every time they gap up, they show you this. This is what I call a paint stripe. That means this thing, look it, this thing tells you all it did was pop a little and then dump all day. Now over here, when it gapped up, see, if you couldn't see this one, this candle from today, you might think, wow, this thing likes to spike, right? It spiked right here, came back down, spiked right here, came back down, spiked right here, came back down. So I would be thinking, all right, I can short this thing, but I gotta let it spike first. But today, it just opened and dumped, right? So now the only reason why I would short this today is once it fell back below these pivots. Right here, I would have wanted to spike up to here. But once it breaks these pivots right here and falls below, but anyway, that's for another video. But the point is, those are the best shorts. The previous candles either all have topping tails or all open and paint stripe. Just blood red, hardly any spike, and close at lows. Really, 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 really nice. History repeats itself, guys. History repeats itself. History repeats itself in the stock market quite often, so, you know, look at the past of the stock and smash it. All right, guys, I'm going to leave a PDF of this. I'm going to try anyway. I'm pretty computer illiterate, but I'll leave this PDF below the video. If you don't mind hitting the like button, I'm going to start making more of these videos. Thank you very much, sirs and misses. Have a good night.